Hello traders and welcome to another video review. Today is Wednesday, October 8th, 2025. Let's take a look what do we have in the economic calendar for today. Overnight Asian session was quite busy actually. We got data from Japan in the form of the adjusted current account, which is growing from 1.88 trillion yen to 2.46 trillion yen. We got data from the Australia building approvals and business confidence, but the biggest situation here, biggest news is the Reserve Bank of New Zealand interest rate decision, and we can see that the RBNZ cut the interest rate from 3% to 2.5%, more than expected 2.75 forecast. So we'll definitely take a look at the New Zealand dollar later on. German industrial production down from 1.3% to minus 4.3%. Very bad data from Germany. We are waiting for the German Buba President Buch to give a speech. ECB Elderson should give a speech at 2:30. Then we got the intraday decision from Poland. Then we have the ECB Supervisory Board member Tomlin to give a speech at 3 o'clock. And as you can see, we are entering the US session. Crude oil inventories is the main event of the early US session. This one is scheduled at 4:30. Cash and crude oil inventories are obviously scheduled for release at the same time. Bank of England MPC member Peel will give a speech at 5 o'clock. At 6 o'clock, ECB President Christine Lagarde will give a speech. And then there's a major event of the US session, FOMC meeting minutes are scheduled for release at 9 p.m. 15 minutes later, there's a speech from the FOMC member Kashkari. And that's about the Wednesday. So without any further ado, let's switch to the chart. We start with the euro dollar. So the euro dollar is moving lower as expected. So right now we are changing our Elliott wave labeling from simple ABC corrective pattern to more complex. First, this is going to be W, X, and now some sort of the wave Y is in progress. So you can see that the price is out of the channel, below 100 periods moving average. We broke below the technical support at 1.1662. So now this one is the technical resistance. 1.1646 now is the technical resistance. We just hit 1.1608, and that's a temporary technical support. However, there is still a good chance for this market to go even lower. The Fibonacci projection for the wave Y target is located roughly around the level of 1.15. There you go. 1.15 is the target level. So basically, that's somewhere around here, and this is how it looks like. WXY is the current wave projection. Please notice that the wave Y might be any wave right now, so it doesn't actually this projection doesn't actually mean that it will be hit, because for example wave Y might be a triangle, wave Y might be running flat, wave Y might be zigzag, or anything else in between. So this is just the projection in case that the length of the wave W will be the same as the length of the wave X. Right, we hit extremely oversold market conditions. Some sort of the bounce is being expected right now. However, it looks like the situation here is quite obvious. The first target for the wave Y, if it's shorted, so it's exactly 61% of the extension. So right now it's exactly here, 1.1606. If there is any breakout lower, then the extension goes down towards the 1.15. Let's take a look at the New Zealand dollar after the interest rate decision. So we got definitely movement to the downside. So the market participants are selling New Zealand dollar, buying US dollar. We broke below the technical support that now will be acting as the resistance. 5,749 is the technical resistance. Local low is quite lower, 5,732, and that's about the 4-hour time frame chart. On a daily, that's the different perspective. On the daily, we are below 100 periods moving average. We broke below last swing, so we got series of the lower lows, lower highs, definition of the downtrend, even if it lasts only like since the beginning of the July 2025. So it's July, August, September, so that's 3 months, and now into the beginning of the October. And the interesting situation here is that there isn't any substantial technical support here in the history, unless we hit, unfortunately, this level here, 5,480. That's the major technical support. As you can see, market respects this level and bounces from this level. It bounces like 2 times already. So the next target is here. How long it will take for the market to get there, it's quite hard to say. Nevertheless, there is still room to the downside here. There is still plenty of room to the downside for the New Zealand dollar versus the US dollar. We are waiting for what the market will see. The outlook remains bearish. After there was unexpected data from Japan, let's take a look at the US dollar versus the Japanese yen. This market keeps moving higher. The gap is still not filled. Let me just place a rectangle here so you can see where is the gap exactly. So let me just paint it. I don't know, maybe in gray. Maybe, how about, there is no gray, so let's paint it. Okay, blue is fine. There you go. Everyone see the gap is blue, and the market has a tendency to fill the gap. So sooner or later this gap will be filled, but it looks like it won't happen. It won't happen soon. Extremely overbought market conditions. Local high 152.65, and this extension might be considered bullish. Right now, all of these levels, 151.52 and 150.85, are now technical support. Let's switch to the daily, and on the daily you can see that the market wants to go higher. We will remove our ABC pattern. On the daily, we hit the extremely overbought conditions as well, and to be honest with you guys, there isn't any significant technical resistance until this level here is hit, 154.81. So that's the technical resistance. The outlook remains bullish. However, please notice gap is there to be filled. What else can we say about this market? Not much. Let's switch to the gold. The gold market hits $4,000 as expected. As expected, all of these minor pullbacks here are still completely not relevant. The market hits $4,036 per ounce of gold, and the market doesn't want to stop. The momentum on the 4-hour time frame chart keeps moving inside of the range located between 50 and 70-80 points, so it's still a positive range. Bulls have the complete control over this market, and it looks like the market wants to move higher. The market wants to hit the level of 4,100. So nothing changes here in the short term. Gold still with the bullish outlook. And the last but not least, let's take a look obviously at the Bitcoin, because the Bitcoin is below the old supply zone yet again, just below it. Look at this big candle to the downside as we went down on the momentum below the level of 50, right now on the 46 level. Local low 120,589, just above this technical support, and the market is consolidating now below the last supply zone lower level, right? And the dips are being bought slowly, dips are being bought. Nevertheless, it still looks quite bearish in this situation. How much did we went? I guess we went down like I think it's about 6% or maybe a little bit more. No, it's even less, 4.46. So it's not that bad. Nevertheless, it's still the biggest correction since this low was made here. Right, it's the biggest correction, minus 4.46. So definitely this correction is no longer a part of this movement to the upside. It's a beginning of some sort of a bigger correction or a bigger pullback. So far, A, B, C to the downside, 3 waves down only. So it is obviously a corrective cycle. The bulls needs to break back above this 3 technical resistance level, test that the swing high indicated by the blue arrow, and then obviously if the test is positive there will be a breakout, and the next target 130,000. Otherwise we will hit the demand zone located where our green rectangle is, and then we will see whether that movement to the downside will be enough for the bears, and the market might be ready to continue the up swing after this this correction. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.